Daily news and analysis. We keep you informed and inspired.
This is World Today.
Hello and welcome to World Today. I'm Ding Hen in Beijing. Coming up, China's sovereign bond sale in Hong Kong raises more than $2 billion. EU will transfer 1.4 billion euros in profits from frozen Russian central bank assets to Ukraine. Iran and Oman are near a Hormuz deal, but uncertainties remain. Defunct SpaceX rocket body crashes into the moon, kicking up dust. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching for World Today. First up, China's Ministry of Finance has raised 15 billion yuan or more than $2.2 billion through a sovereign bond auction in Hong Kong. The sale was conducted on Wednesday this week for international institutional investors. It gained an enthusiastic market response, achieving a 4.67 bid-to-cover ratio. It is marking the fourth tranche of the Chinese central government's 84 billion yuan sovereign bond program approved for the year. The sale came shortly after Hong Kong launched the China government bond futures contracts designed to help global investors to hedge against the mainland bond market risks. So for more, joining us now on the line is Dr. Yao Shujie, Chang Kong Professor of Economics with Chongqing University. Thank you very much for joining us, Professor Yao.
You are welcome.
So first of all, how would you explain the strong performance of Wednesday's bond auction?
Yeah, the bid-to ratio covered 4.67% means there is a very strong demand for the government bond issuing in Hong Kong. Because for every available bond that the Ministry of Finance is prepared to issue, there are 4.67 yuan of buying power in the markets. So this is a very strong situation, meaning that the demand for the Chinese renminbi bond in the offshore market is really strong.
Now, some say the latest bond sale could enhance the offshore yuan yield curve, which can serve as an anchor for more firms to issue bonds and accelerate renminbi internationalization going forward. Would you agree?
Yes, one of the primary objectives of the offshore bond issued by the Ministry of Finance in Hong Kong is to establish a very strong basic yield curve for the renminbi offshore government debts. This is part of the infrastructure development of the financial opening of the Chinese renminbi internationalization process. It is very important to establish a yield curve because it is firstly for attracting sovereign fund and foreign investors to buy renminbi debts in the offshore market. And secondly, it has a very strong guiding purpose for the domestic enterprises to issue enterprise bond in the overseas markets. There is a strong reference for the interest rate that they have to pay.
So, by the way, what's the correlation between Wednesday's bond issuance and this new China government bond futures contracts launched in Hong Kong Stock Exchange? Are they complementary to each other?
Yes, for any sovereign bond issued in any market, in this case, the sovereign bond is issued offshore in Hong Kong in particular. Then in complementary purpose, I think the stock exchange has already the futures market. The purpose is to for the investor to hedge the risk and also test the credibility of Chinese government debts in this market. So a futures market and also the bond issue is parallel in a sense to compete the financial market, particularly for the Chinese overseas bond.
According to Chinese financial data provider Wind, China's onshore bond market swelled to nearly 200 trillion yuan or 29.6 trillion US dollars as of June, making it the world's second largest just after the United States. But when it comes to bolstering the demand for offshore Chinese government bonds, Professor, what do you think remains to be done?
Yes, I think the Chinese government, of course, it is through the Ministry of Finance, which have made these kinds of overseas offshore government bond based in Hong Kong for the last almost 2 decades. But gradually, the amount of issuing is improving all the time. This year, the target is 84 billion RMB, which is accounting almost half of the total stock of the government bond so far. So this means that the process is gradual. Of course, if you issue government bond, there are many issues that you have to consider. For the Chinese case, it's not necessarily for making investment. It's trying to provide a mechanism that RMB can go global. And before RMB can go global in larger scale, the Chinese government have to test the water to see how the response of the market. For example, like this time, the bid to cover ratio is 4.67%. That means there is a fairly strong demand in Hong Kong. Basically, the investors are institutional rather than individuals. And in terms of the absolute amount, 15 billion RMB compared to the United States is still very, very small because the United States, 1/3 of the total debts is about overseas investors because it is used as a for major currency reserve. For RMB to become a major currency reserve, there will be still a long, long way to go. I think what the Chinese government is doing at the moment is to test it whether the RMB could be welcome and how much risk that the central government is willing to take. So certainly, over the years, the scales of this bond is increasing because it's part of the process of the RMB internalization. Foreign investors, they want to use the high quality Chinese RMB-based credit as part of the investment portfolio, apart from, let's say, the US dollars, the sterling pound, and also the Japanese yen, etc.
So, do you agree that in general there is now a general shortage of high quality yuan denominated assets in the offshore market? Because some people say that's one of the reasons driving the global investors' appetite for either the latest central government bonds or this China government bond future contracts traded in Hong Kong. Do you agree with this observation? Why or why not?
Yeah, whether there's a shortage or not, it depends again on a couple of indicators. Just the bid to cover ratio of 4.67%. That means there is a stronger demand for the actual amount available. So in that sense, the market sentiment provide a reflection that maybe there's a shortage. Another indicator is that China's economy is getting bigger and bigger, the second largest economy in the world, and China is number one in terms of export, merchandise export, manufacturing, and many things. The international trade, China is the biggest trade partner for over 134 countries. And there is a very strong demand for multilateral, bilateral transition dominated by RMB. And if RMB could become more internationalized, reflected by the high-quality RMB bond, then there would be a stronger demand because many countries, they may concern about the US dollars because despite it is still a highly dominant international reserve currency, but the US inflation, the overprinting of the greenback over the last few years also gives some people uncertainty. So maybe lots of sovereign bonds, sovereign fund and investors, they would seek for alternative currencies such as the renminbi. Because other currency like the euro, the sterling pound I just mentioned, and the Japanese yen, they have their strong point, but they also have their weakness because their background economy is getting relatively smaller compared to China and the United States.
By the way, Professor Yao Shujian, as we are talking about this latest Wednesday's bond issuance in Hong Kong, for the money, for the funding raised in Hong Kong through such a manner, through such a channel, how would the Chinese central government usually utilize the money raised?
Well, I say the external bond is only a fairly small fraction, about 0.5% of the total government debts. 99.5% of the debt is domestic. So how to utilize, I think, is more symbolic than the actual amount because even 200 billion yuan is very small compared to what the Chinese market. But why the central government is very keen on doing this and why the market is so responsive? Because it is an instrumental purpose. The first purpose we just mentioned is to establish a long-term yield curve of the renminbi at the international level. And secondly is to prepare for a solid financial infrastructure for the renminbi to become internationalized. And we have to look at the future, maybe in 20, 30 years' time. Renminbi could become a major foreign exchange reserve market, in parallel to the US dollar. It may not replace the US dollar, but it could become a major competitor for the US dollar in the near future, I say 20, 30 years time. And the Chinese government have to prepare for this purpose. So how we utilize this is not the actual amount of money that we need, is the infrastructure that we need to establish to have the financial institutional setup. So in the future, when we expand, let's say next year and the year after that, we have the mechanism for doing so.
As you said earlier, Professor Yao, for more than 17 years, China's finance ministry has been issuing offshore sovereign debt annually in Hong Kong. So why is Beijing moving to cement Hong Kong as the premium global hub for example, for yuan trading, yuan settlement, and yuan asset pricing?
Yeah, Hong Kong is a special administration for China, and Hong Kong's pivotal important role as an opening window for China have been clear over the last almost 50 years, half a century, when China become opening up. And more so, Hong Kong has proved to be highly resilient as an international financial hub, not only just for the renminbi internalization, but also for the stock exchange. It has proven that Hong Kong institution, the Hong Kong talents, and also the Hong Kong Stock Exchange and the financial services is second to none in Asia. It certainly is better in many financial centers in the world, in parallel to New York and London as one of the three major financial servicing centers in the world. And this is why the Chinese central government, treat Hong Kong is so importantly. And secondly, the Chinese government want Hong Kong to be as prosperous as possible. And this is one of the very small steps for the mainland government to support the special economic area in region like Hong Kong.
Thank you very much for joining us. Dr. Yao Shujie, Chang Kong Professor of Economics, joining us from Chongqing University. You are listening to World Today. We'll be back. You're listening to World Today. I'm Ding Hen in Beijing. The European Union says it has collected 1.4 billion euros in revenues from frozen Russian assets and it will channel the proceeds to Ukraine. Brussels said on Wednesday this week that the payment is the fifth transfer of its kind. 95% of the latest tranche will go through a mechanism to help Ukraine repay EU and G7 loans. The remaining 5% will flow through a facility to meet Ukraine's military needs. More than 210 billion euros in the Russian central bank reserves were frozen by the European Union after the Russia-Ukraine conflict began in the year 2022. The immobilized assets have generated a total of 8 billion euros in windfall profits so far. So for more, joining us now on the line is Dr. Warwick Powell, Adjunct Professor at Queensland University of Technology. Thank you very much for joining us, Warwick.
It's a pleasure to be with you.
Okay, 1.4 billion euros, that sounds like a lot of money, but 95% is legally tied to repayment of the existing EU and G7 loans to Ukraine. So from a financial sustainability standpoint, how effective is this windfall profit mechanism in terms of actually easing Ukraine's fiscal difficulty rather than just shifting around the Western debt?
Well, it's largely shifting Western claims around rather than injecting any substantial new unconstrained resources into Ukraine's budget. 1.4 billion euros sounds like a lot of money, but 95%, as you say, is simply being used to service or repay loans that the EU and the G7 have already extended, and 5% is going to military needs. Now, that's roughly 70 million euros. It's a drop in the ocean when it comes to what is required to mobilize the production and distribution of military assets. The other important thing to remember in all of these discussions is that the euro area itself is a currency issuer. It actually does not face a hard monetary constraint. So the same euros that have been used to repay or service the loans could actually have simply been created and directed through ordinary channels. In real terms, the mechanism that has been deployed does very little to ease Ukraine's underlying fiscal pressure. It's more about political optics, and it limits the visible burden on European budgets than it's to do with material fiscal relief itself.
So, Ukrainian President Volodymyr Zelensky has been warning so far, like over the course of so far this year, that delays in Western air defense deliveries to his own country are actively costing lives on the ground. But like we mentioned earlier, only 5% of the latest money transfer is directed towards Ukraine's immediate defense and military needs. So I guess based on what you have, based on a point you made earlier, this level of funding can by no means deliver a meaningful relief to Ukraine's actual, air defense shortages, right?
It can't really do much at all. Not only does it equate to very little additional military hardware, the reality is that the Western industrial system and the military arsenal has been drained substantially, not only by the protracted attritional war that has been fought in Ukraine, but also by the last 5 months or thereabouts of American military engagement in its war against Iran. There have been many reports now over the course of the past few weeks indicating clearly that the United States and the West, broadly speaking, in other words, NATO, simply does not have much left in reserve. What it does have will be prioritised for their own immediate needs. Secondly, it'll be prioritised for the needs of the United States in its war against Iran. And if there's anything left over, Ukraine might be lucky to get some of that. There is simply nothing in the material supply chain barrel to give to Ukraine, no matter what monies are being mobilized.
Okay, so the Ukrainian side is getting the leftover. I get your point. Now, of course, a message from the EU is that Russia has to pay for the damages in Ukraine that is caused by Russia or caused by this war with Russia. But in terms of economic deterrence, Warwick, do you think using Russia's own frozen profits against Russia itself creates a genuine leverage, or does it simply signify to other nations that, okay, the European or the Western financial system in general is increasingly weaponized?
Redirecting the interest does not impose any meaningful, let alone a decisive economic cost on Russia. Let's not forget that the principle was frozen 4 years ago. It is a financial resource that Russia has not had access to in that time. And it has not made one iota of difference to the capacity of the Russian economy to respond to its new circumstances, let alone Russia's capacity to materially sustain and intensify its war of attrition. The amounts that we're talking about is a drop in the ocean when it comes to Russia's overall fiscal position and its other international or foreign exchange revenues. Its revenues from oil and gas have been, of course, a substantial part of its foreign exchange. And over the course of the last few months, Russia itself has been the beneficiary of the increases in oil and gas prices around the world. What it does do, as you intimated, is send a clear signal to every country in the world that sovereign reserves held in Europe can be frozen indefinitely and their yields redirected by political decision. And what this means, what this signals, is a reduction in perceived safety and neutrality of European assets. And as a result of that, sovereign nations and their institutions are responding by diversifying into other assets, whether it's gold or other currencies and non-Western arrangements. So this particular move is largely about messaging to domestic constituencies to create a theatrical effect that Russia is being punished, when in effect they are creating long-term risks for Europeans themselves.
Now, turning to the fighting between Russia and Ukraine, both sides have been intensifying their long-range attacks in recent months, leading to a jump in civilian death. So in your observation, has the war entered a new stage? 1 minute.
Not really. I think the war has been in an attritional phase for a long time. Again, what we've seen in the last 40 days from Ukraine has largely been about creating social media ready theatre with the aim of pressuring Russia to come to the negotiating table. That campaign has failed miserably, and Russia has intensified its attacks across Ukraine. Ukraine is on the back foot, and it is losing territory and critical positions and losing men and machines and weaponry.
Thank you very much for joining us and for your observation. Dr. Warwick Powell, adjunct professor, joining us from Queensland University of Technology. More to come. Iran and Oman are near a Hormuz deal. Defunct SpaceX rocket body crashes into the moon, kicking up dust. You are listening to World Today. To listen to this episode again or to catch up on previous episodes, you can download our podcast by searching for World Today. We'll be back after a very short break. You're back with World Today. I'm Ding Hen in Beijing. The Trump administration has refunded about 100 billion US dollars of the tariff revenue collected before the US president's Liberation Day duties were struck down by the Supreme Court. The figure represents about 60% of the revenue from the sweeping tariffs imposed in 2025 using the International Emergency Economic Powers Act. The tariffs were later scrapped in late February this year after the High Court ruled that they were not really authorized. Half a month later, a federal judge ordered that the tariffs collected under the act must be returned to the U.S. importers. So for more, joining us now on the line is Dr. Muhammad Ali Nasir, Professor of Economics with the University of Leeds. Thank you very much for joining us.
Thanks for having me.
So, although the refund is ongoing, President Donald Trump has actually vented his rage over the Supreme Court ruling, and his administration has basically taken a series of steps to try to recreate the same tariff regime using other legal channels such as Section 301, for example. So compared to the route that was already struck down by the High Court of the United States, do other channels stand a better chance of surviving court challenges?
Yeah, I mean, one can argue that alternative legal channels like Section 301, which basically grants authority to investigate and retaliate against unfair foreign trade practices, section like that may have slight better chance of standing against court challenges. Or there is also Section 232, which grants authority to adjust imports which are related to national security. So one could argue that in the context of the president's legal president, those two sections may have slightly better chance against the challenges Mr. Trump has been facing in the US courts, or his policies been facing in the US courts. But there are also procedure hurdles if you go towards Section 301 or 232. For instance, in the case of Section 301, the tariffs must be logically tied to some specific unfair trade practices, and you need to have some administrative procedures related to that. You got to gather the evidence, formulate the reports. So there are long procedures which can take months to before that. Under those sections, you can impose any tariffs or take any measures. It's slightly different from Mr. Trump waking up one morning and decided to put tariffs on any country he likes. But these procedures, these sections, as I said, you could say that they could be a bit more effective in the court or navigating the hurdles in the court, but they are more complex and they will take more time, and they will involve evidence gathering and also various administrative procedures. So yeah, the difficulty would remain maybe in a different form.
Okay, so now was 100 billion US dollars already refunded to importers, for example. How can this injection of capital impact US supply chains and inflation in the short term?
Yeah, I mean, this, of course, was a mistake imposing tariffs, which are imposed under the Liberation Day, etc. And of course, whenever a mistake is corrected, there are some positive effects. So this is a positive news for the US suppliers. And of course, this is the 100 billion pound injection. Well, evidence suggests that whenever there are tariffs imposed by a country like imposed by the US, these are the US consumers and US importers, they pick the bill. So we did see increase in inflation due to these tariffs. So what we could expect may be partial adjustment to that. I would not expect a huge decrease in the prices due to that, because what the evidence also suggests that usually when there's a decrease in the tariff, when you increase the tariff, the prices goes up for your domestic US consumers. But then if the tariffs are decreased or there is a rebate like this, then the importers who've been picking the bill, they may not pass those benefits to the US consumers, but it might be that they do pass some benefit. And then also we don't know. We are not certain about the policy of this administration. So in terms of really giving the benefit to the US consumers, we should not have too much hope. But this is definitely a good news. And of course, this will also give the US importers some room to breathe.
Okay.
And they will allow them to import again without facing these massive tariffs which they've been facing due to Mr. Trump policy.
Some room to breathe, but as U.S. importers are fully aware that their federal government is actively trying to reimpose the same tariff regime under different legal authorities, do you think they are really capable of navigating business planning and pricing strategies?
I mean, they try. The US importers, they have no choice, but they try navigating this uncertainty. But then they are forced to shift from long-term forecasting to very highly flexible defensive planning model. And that also have costs. For instance, if you have a long-term contract with a supplier in East Asia, in Vietnam, in China, in anywhere, you could have favorable terms because you are a long-term buyer. You can engage in the contract. But if you are in a situation like this, there is a lot of uncertainty that limits your strategy as an importer in terms of making long-term plan. And it also limits you degree to which you can really diversify. One of the strategy they may also be using, and they are using, the evidence suggests they are using, is the front loading. So whenever their situation is good, then they import more because they are not certain. But of course, that increases their inventory holding costs, which is again not a good thing for the businesses. And sometimes they could perhaps also they have to then delay the capital expenditure because they don't know how much would be the cost if Mr. Trump impose other form of tariffs or some other form of restriction. And therefore, as I said earlier, they have to go for contracts which may not be the best they can get had there been no trade war and no tariffs.
In a bigger picture sense, Professor, President Donald Trump has wielded the tariff weapon as a means of incentivizing American reshoring. However, according to a recent report by Fortune, this magazine, as the U.S. leader's tariff plan continues to fluctuate, some U.S. corporations that initially moved away from China due to Trump's policy are nowadays beginning to reinvest in suppliers based in China. What is your thought regarding this?
Yes, I mean that tariff whiplash effect which we try to Mr. Trump and US try to generate, that is not that effective. China has a built-in resilience. Chinese suppliers offers what not many other suppliers around the world can or do offers. The Chinese suppliers offer deeply integrated industrial clusters. They have a massive manufacturing capacity and they are very resilient and they are very competitive and efficient in terms of the cost. So they do offer a very good deal. And if you deny that deal to your local importers or local consumer, that is not economically beneficial. And their reshoring policy, which the US and Mr. Trump was thinking to implement, that is out of reach really, because the true domestic reshoring requires massive long-term investment, and the US is not making that, and they are not investing in their labor force, in their capital, human capital. So without the physical investment, capital investment, and without the investment in the human capital, which China has been doing for many years, then you can't really do the reshoring. So even if you could somehow harm Chinese manufacturing capacity, you would not benefit for that. Maybe that manufacturing capacity shift to some other country, but not to the US, because you don't have those ingredients which are required. As I said, you don't have infrastructure, you don't have industrial capacity, you don't have labor force which underpin or support that industrial capacity. You don't have resilient supply chains, you don't have ecosystem which takes decades, not even years, to build. So with this Mr. Trump 4 or 5 years in the office, which is a very short term period, and I think he's in the second year of presidency, we didn't see anything like long term policy which has been implemented, which could help reshoring or which could help the future industries in the US. Rather, focus has been really creating chaos and trade wars, and then the actual wars they've been engaged.
Yeah.
So yeah, so that doesn't really help anything like reshoring.
Your point's well taken. Thank you very much for joining us. Muhammad Ali Nasir, Professor of Economics, joining us from the University of Leeds. You're listening to World Today. We'll be back. You're listening to World Today. I'm Ding Hen in Beijing. Iran says it is close to reaching an agreement with Oman on new shipping arrangements for the Strait of Hormuz. Tehran says the two nations are putting the final touches regarding a plan to jointly manage navigation through the strategically important waterway. Under the proposal, the current temporary northern and southern shipping lanes will be replaced by a single route through Iranian territorial waters for up to 4 months. However, Iranian officials are emphasizing that the agreement would by no means mean that the strait is fully reopened or that security concerns have been resolved. Tehran has also denied holding any talks with the United States, saying its negotiations with Oman are purely bilateral. For more on this, my colleague Xu Yawen earlier spoke with Dr. Zhang Chuchu, Deputy Director with the Center for Middle Eastern Studies, Fudan University.
Dr. Zhang, Iran says it's in the final stage of drafting an agreement with Oman on a new shipping route through the Strait of Hormuz. So what key progress have they made in the deal?
Well, I think there are some key progress. For instance, the primary breakthrough is that Iran and Oman have reached a mutual understanding on the precise geographical coordinates and parameters of a new so-called provisional shipping channel through the Strait of Hormuz. For example, according to the recent media reports, we can see that some of the key operational details of the progress include finalized channel coordinates. For instance, source in Iran claims that both states are in the final drafting stage of a joint statement outlining in the agreement, which is trying to send an optimistic signal. And also, the new arrangement is designed to operate temporarily for a trial period, intended as a transitional step toward broader regional stabilization. And also, it seems that there is also some sort of progress in terms of the route structure, because the proposed interim arrangement establishes a route where vessels entering the Persian Gulf will transit predominantly through Iranian territorial waters, with some segments passing through Omani waters. So I think the two sides, they are also trying to make more agreements in this sense.
Well, Dr. Zhang, here's something very interesting. We hear U.S. President Donald Trump says a deal on reopening the Strait of Hormuz could be reached soon. Well, from Iran's side, it insists it's only negotiating with Oman, not Washington. So why is there such a gap between the U.S. and Iran's descriptions of the talks? And what does this reveal about the current diplomatic situation?
Well, you can see that this is not the first time that there are two very different discourse systems that the two sides are using. And actually, at this moment, I would say that we have to acknowledge that both sides, the United States and Iran, they want to acknowledge some sort of technical progress on this matter, and they're also trying to send some of the optimistic signals showing that the two sides are at least trying to de-escalate the conflict, and also they're trying to negotiate with each other. But at the same time, both in Iran and in the United States, first of all, domestically speaking, there are different sections. For instance, the hardliners do not want their government to make great compromise on this issue. So that is why you see, for instance, Iran does not want to say that we are trying to make great compromise towards the United States. And also, there is another matter that is the lack of trust between each other, because you see over the past few months, sometimes the United States, it changes its positions frequently. So at this moment, Iran is not sure whether the United States would really make some sort of progress and compromise, I would say a compromise in the end, or there is going to be another round of escalation in the end. So that is why you see that the two sides, they are still bargaining towards each other.
So let's zoom in to who has greater influence over the Strait of Hormuz, because we know under this new proposed deal between Iran and Oman, commercial ships would use a new route passing through Iran's territorial waters. Although this is only a temporary measure, then how could it change the way the Strait of Hormuz is managed? Does it give Iran greater influence over this critical waterway?
Well, we know historically speaking, maritime traffic in the Strait of Hormuz used internationally recognized traffic separation schemes overseen under international law frameworks, which permits transit passage through international and Omani or Iranian waters without sovereign pre-approval. And routing traffic directly through Iranian territorial waters shifts maritime management from open international transit to a regulated corridor where Iran is trying to exercise physical jurisdiction and oversight over the commercial vessels entering the strait. So in that sense, if in the end there is agreement like that, then it means that Iran is actually trying to exert greater influence, because it means that it's trying to gain primary oversight over inbound traffic, and that could hand Tehran unprecedented leverage over global supply chains.
Then if Iran takes a larger role in managing traffic through the Strait of Hormuz, how are the United States and the Gulf countries likely to respond?
Right. I think a shift toward Iranian oversight over the Strait of Hormuz, it could create certain balance, although very fragile or even delicate one, between urgent economic relief and fundamental strategic concerns. And right now, indeed, there are a lot of great disagreements between the United States, the Gulf countries, and Iran. So the likely responses could be that for the United States, it could seek to lower global fuel prices and restore maritime flow. However, the United States, it's already stated many times that it strongly opposes any permanent framework that grants Iran legal control over this area. And the United States Navy and its allies might also maintain heavy naval presence nearby to deter Iranian overreach. And also for the parts of the Gulf Arab states, such as Saudi Arabia, the United Arab Emirates. So for these states, they desperately need their oil and LNG exports resumed to stabilize revenues and regional supply routes. However, they remain wary of yielding sovereign leverage to Tehran. So consequently, these states, they may push for joint regional or multilateral supervision of maritime security rather than simply letting Iran act as the sole authority.
And lastly, Dr. Zhang, Iran says the Strait of Hormuz cannot be fully reopened unless Washington ends its blockade on Tehran's ports and lifts other economic sanctions. Why is Iran linking the reopening to U.S. actions, and what options does the U.S. have if the deal between Iran and Oman moves on?
Right. The issue here is that Tehran it now perceives control over the Strait of Hormuz as its most powerful strategic bargaining chips, because we know that it does not have a lot of cards in its hand. So Iranian leadership argues that it cannot guarantee open maritime security while facing an active United States naval blockade on its own ports and restrictive economic sanctions. So you see that the two sides, they are bargaining with each other. And what options does the United States have if the deal moves forward? I think maybe several scenarios. For instance, maybe to seek for de-escalation. So in that sense, maybe it would try to ease quietly or suspend naval blockade activities against Iranian ports. In return for more progress around the negotiation. Or the second scenario might be parallel enforcement or armed escorts. So it means that it might allow commercial traffic through the channel while also positioning the United States and allied warships just outside Iranian territorial waters to conduct armed escorts. Or another scenario could be multilateral diplomatic track. For instance, it might use a short period window to transition from the temporary Iran-Oman arrangement back to a broader formal multilateral agreement. That might also be possible.
Dr. Zhang Chuchu, Deputy Director, was the Center for Fudan University's Middle Eastern Studies, speaking with my colleague Xu Wen. You are listening to World Today. I'm Ding Hen in Beijing. A SpaceX rocket piece has smashed into the moon at a high speed. The school bus-sized object is the second stage of a SpaceX Falcon 9 rocket that launched a lunar lander towards the moon in January 2025. Weighing some 4,000 kilograms, the rocket body slammed into the moon at a speed of over 8,600 kilometers per hour. The impact occurred near the moon's terminator line, or the boundary of its shadow between the sunlit side and the far side of the moon. The object stood up a plume of lunar dust that was briefly illuminated by sunlight, but difficult to spot with our naked eyes from Earth. So for more, joining us now on the line is Dr. Zhang Fan, Associate Professor of Astronomy from Beijing Normal University. Thank you very much for joining us.
Hello.
So space junk bombarding the surface of the lunar is rare, but nothing new. Regarding the latest one, what's unusual about it?
Right. So there had been sort of hits on the moon by both unintentional sort of objects and people intentionally hit it. For example, in the Apollo times, people set down 14-ton things to smash into the moon, and just in 2009, NASA did a hit, so they could look for water vapors from the plume that got kicked up. But those are very intentional. And this is an unintentional object coming in from very far. And what's unusual is that despite being unintentional, it has been tracked very carefully. It's been predicted, the hit location and time has been predicted very accurately. And then some astronomers have observed this thing and confirmed it is, in fact, what it's claimed to be is a second stage rocket. So yeah, it shows our capability to monitor things hitting the moon has grown over the times.
So as you said, the impact was unintentional, and that's the claim of the SpaceX as well. And usually such an object, as I understand, typically falls back into Earth's atmosphere and burns up, or plunges into the ocean after completing its mission. So in this particular case, why do you think those two scenarios didn't happen? Is there any lesson that can be learned from this case?
Right. So it didn't fall back onto Earth, mostly because it's going to the moon. So the second stage rocket was actually responsible for putting the two landers it was carrying all the way to the lunar transfer orbit. So it's mostly orbiting the moon on an elliptic orbit rather than going around Earth. So coming back to Earth and burn up in Earth's atmosphere would be too expensive anyways. But the interesting thing is they didn't even try to deorbit this thing deliberately by hitting the moon or better going away, leaving the moon sort of Earth system. The reason for that is they didn't want to spend extra fuel for doing that, and because you're going all the way that far to the moon, to the lunar orbit, you don't want to carry extra fuel for such a long way. So it's mostly a cost benefit consideration that SpaceX made, that they did not try to deliberately manage the debris, and they basically let it go whatever it could. And the lesson you learn from this is you can understand this cost benefit analysis, but it would be better if they, for example, using smart orbit design, they may be able to deorbit this thing or kick it away sort of in a less fuel costly way. But some considerations should have been done. It would have been better.
Okay, so the predicted crash of this rocket body has become a spectacle for astronomers and space study enthusiasts who are eager to watch how it is going to unfold. So what specific issues do you think are worth watching?
So because this is man-made, you basically know what it is and what it's made of. So when this thing kicks up dust, and you can analyze the spectrum from that dust, and you learn what's in the moon, because whatever is from the rocket itself, you know what it is. So it's cleaner. And then because it's empty hole, it hits the moon, creating a different type of crater. And that from that you can learn the geological structure of the moon, and this is important. For example, if you want to use the moon as a gravitational wave detector, for example, and when gravitational waves comes and squishes the moon, you want to learn whether that kind of a quick this sort of squashing translates elastically or plastically, and studying the crater would tell you a lot about that. So there are a lot to learn from the moon by observing this hit.
NASA is planning to build a lunar base beginning later this decade, and China is also aiming to land its first astronauts on the moon by the year 2030. How could a space junk impact those goals, briefly?
So it's not too much in terms of direct hit. There are asteroids hitting the moon all the time, but the problem is this thing orbits the moon most of the time before it hits. So when it was in orbit, it's a persistent threat to traffic between the moon and Earth. So that's the problem, more so than any regular asteroids.
Okay. Thank you very much for joining us and for your analysis. Dr. Zhang Fan, Associate Professor of Astronomy, joining us from Beijing Normal University. That's all the time for this edition of World Today. To listen to this episode again or to catch up on previous episodes, download our podcast by searching for World Today. For further discussion, you can follow us on X at CGTN Radio. I'm Ding Han in Beijing. Thank you so much for listening. Bye for now.